Better watch out, you better not cry, better not pout, I'm telling you why. Santa Claus is coming to town. He's making a list.
Hello everyone, welcome to the ichimokucharts.com daily analysis for gold for Monday, December 17, 2012. Well, a continuation of the trend to the downside today, and a candle has made a lower high and a lower low, continuing that downtrend that began 3 trading periods ago with that fairly large black body candle and the test down below the 1700 level. This highlights very strongly how important the concept of support and resistance working in zones is. Here we saw the market for the previous week and a half testing down below the 1700 round number support and testing down as far as around the 1687 level and being strongly rejected from below that area. This does set the market up for a potential change of trend back to the upside and a test up above the 1700 level. We do need to be aware, however, that 1700 now may act as an area of resistance to this market as it has over the previous 2 trading days, so there is a barrier there. But we do see very strong support here in this zone down to this 1687 level, and we saw on 1, 2, 3, 4, 5, 6, 7 of the last 10 trading days that the market found support down there, so it is crucial to the future of this market in the short-term time frame. We do also have strong support down around the 1680 level from a previous resistance and support, so that is another level that will potentially hold up as support for this market if the trend does continue down. But looking at this current candle, we have seen the buyers take control even though the trend was down by closing up towards the high. And the large shadow on the bottom obviously highlights the loss of commitment by the sellers as the market was trading down around this area, as we have seen on these previous occasions. Previously we saw the trend change to the upside in the market, trade up to find resistance around the cloud, and that certainly is the most likely scenario for the next few days trading. Crucial that we do watch the 1700 level and the high of the current candle for a potential higher high and higher low. We do have very close by resistance now from the Tenkan Sen, however, around the 1704.5 level, so we do need to watch that. The scenario might be a little bit different than previously here, so that is crucial, but certainly just up above there, extending up to the cloud around the 1720 level, very strong resistance coinciding with the Kijun Sen trading up around there, and a very thin part of the cloud. Now this highlighted area also is a previous area of support and resistance that we do need to watch, and this market will most likely find resistance up around this area in the middle of the zone with where the cloud and the Kijun Sen are trading if the market does rally. In terms of the Fibonacci extension, we're examining the current first time frame relationship and the previous time the market's trending down. And here we see the market testing to the 50% level and being strongly rejected from there. So that does set this market up for that change of trend. With the Fibonacci retracement, we have seen the market tested the 78.6% level once again. 3 days trading, testing below there, almost testing to the 100% level today, and being strongly rejected from there. It does suggest also potential for a change of trend to the upside. Looking at the Ichimoku indicators, and obviously a bearish market in all 3 time frames. We have the market trading down below the cloud, so we're bearish in the long-term time frame, trading below the Kijun Sen, so we're bearish in the medium-term time frame, and below the Tenkan Sen, so bearish in the short-term time frame. Looking at the Kijun Sen, that's pointing flat, so there is a strong possibility that price action will be attracted back towards there, so that does set this market up for that change of trend with a very strong likelihood that that will happen. We do need to be aware, as I've already mentioned, that strong resistance overhead from the Tenkan Sen around the 1704.5 level, and then also up here around the cloud, where the cloud and the Kijun Sen are trading here around the 1720 level. Now, if this market can rally quickly over the next couple of days, it will be interacting with a fairly thin amount of cloud, so there is a possibility we could see a bullish market, but I doubt that it's really going to break through there. I think we're probably going to see quite some indecisive trading over the next period, with the holiday period coming up. So we'll probably see the market trade up to the cloud and sell off and find support down around the 1700 level in a zone extending down to around the 1687 level, and it's likely that the market will do that over the next week or two. But then again, this is preempting the market. We shouldn't ever preempt the market. The market could do anything, and we need to be guided by the indicators and how the market is reacting to the Ichimoku indicators and the areas of support and resistance and our Fibonacci levels, and let the market guide us. But certainly we are coming into if we do rally, coming into a very large zone of resistance, and it's unlikely that this market will trade up through to extremely higher levels over the next week or two.
Better watch out, you better not cry, better not pout, I'm telling you why. Santa Claus is coming to town. He's making a list and checking